Good morning, Dornbush download number 59. We're standing in different spots. I'm sort of feeling a bit awkward here.
Out of the comfort zone.
Out of the comfort zone. I don't know what to do.
I know what it's all about.
The comfort zone. Or
comfort zone.
Get out of the comfort zone. So, Dornbush download number 59. A bit happening this morning, Dan. We're recording this on Wednesday.
Yes.
And Westpac have decided that they need to go out and raise some capital. No great surprise that they've done that, but probably the...
It looked like they dodged it though for a bit, didn't it, Andy?
Oh, they did. Well, so what did they do? I'm trying to remember because ANZ sold a sander, CBA did the cap raising.
NAB did a cap raising.
So what did Westpac do? Didn't Westpac sell something off?
No,
they did the notes.
They did notes.
They did the notes. Anyway, so they're now at raising $3.5 billion. So if you're a Westpac shareholder, for every one Westpac you own, you'll have the opportunity to, for every 23 Westpac you own, an opportunity to buy another one at $25.50. If you choose not to do that, you can actually sell your rights on the stock exchange. They'll start trading in about a week's time. And if you choose to do neither, so either take them up or sell them on the ASX, Westpac will attempt to sell your rights, and you may receive a small payment at the end. So, and you know, we're seeing that at the moment with Origin, and we've spoken about in previous downloads about Origin, and of course it also happened with NAB, and it also happened with CommBank recently. So, a bit of a track record from that point of view. So, we'll know a little bit more. As someone's phone's ringing.
Interestingly, though, they put interest rates up too.
Well, I was going to say that's the other sting in the tail. They're saying that they're increasing home loan rates by about 0.2%.
Yes.
And that's in reaction to APRA, the Australian Prudential Regulatory Authority, basically forcing them to hold more capital against home loans. So APRA, so they're the people who basically make sure that they were the guys asleep, or guys and girls asleep at the wheel with... HIH,
yes.
And ever since then they've been hyper vigilant, making sure there ain't another HIH, and so they've looked at
which is great for investors.
Well, they've looked at the median Sydney house price, which is now $1 million, and you need $140,000 in income to support a Sydney home loan, and they're going, this is a bit cray-cray. We actually need to sort of take a bit of heat out of this market, and that's why we saw auction clearance rates have started to come off, and so this is Westpac's response to that. APRA is saying you need to hold more capital, and so that cost of capital is more, so therefore increasing rates. So you're right, in a lower interest rate environment, you've actually got the banks increasing rates. And now that Westpac's done it, certainly you'd expect the others to be doing that.
The other thing we saw was, reports that inflation's going up a tad too. So, rates up a little bit in line with that. And it takes flows through, doesn't it?
And it puts a bit more pressure on the RBA, doesn't it? Because of course the Reserve Bank, because the Aussie dollar's had like its best run in 6 years. Yep. It's back at about 73 cents.
So they don't want it there, do they?
And when the dollar was falling, it basically meant the RBA didn't have to do anything. It was almost like a quasi-interest rate cut. But now the dollar's on the march again, because it doesn't appear as though the US... lots going on, ladies and gentlemen. There's lots going on in the melting pot. And I think if from a share market point of view, that's why we're going nowhere. Because everyone's going, what is going on at the moment? You got... APRA doing their stuff, you've got the Reserve Bank doing their stuff, you've got the US Fed not doing their stuff. It's just...
And the more we see about the Fed, they're not going to put up rates this year either, are they? They're going to sit on their hands.
Well, Michael gave that site last week or the week before where, looking at the probability of an interest rate change, and I think the last time he looked at it, it was like a 5% change. And a month ago, it was like 80 or 90%, so big change. So, ladies and gentlemen, those of you who are watching, we've got a bit of a handle on this, but if your head is swimming at the moment, I've actually got a particular client I'm thinking of who'd be sitting there just going, la, 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 because she just says, Andrew, when I hear you speak, all I hear is blah, blah, blah. I can understand why she would be saying that, because there's just so much noise going on at the moment. So, bottom line, keep talking to us from a share market point of view, which is the main focus of what we're doing here from a video point of view. It's interesting, isn't it? It bounced hard off that 49.25. 49.28 was the magic number. Bounced off that 49.25 back to 52 something, and now back at 51 something. What are your thoughts, Dan? What would you be doing?
Low 51s. It's a tough one. Andrew, like
Lots of noise.
lots of noise, you know, from a yield point of view though, you know, those banks are back in value, aren't they? So,
Well, and they're, you know, 40% of the index, and that's, when we've said this for a number of weeks, we think that will hold that steady. But if you had, you know, sports bag full of cash, you know, Mr. and Mrs. Mark, sports bag full of cash, would
I'd be going to Europe, Andrew.
back to Parry? But would you be starting to drip a little bit of money in at these levels?
Yeah, definitely.
Yeah. Okay.
Yep.
And I would tend to agree. I wouldn't be going too hard, but certainly that incremental buying along the way. Anyway, have a chat to Dan, Michael or I, or John Gilson when he's here once in a while, and we can point you in that direction. So Dan, stock of the week?
Yeah, we've spoken about Tassal before, Andrew, haven't we?
It was one that we like, and it's been really kind to us.
It has been really kind to us, and it's holding up really well at the moment as well. So they had, I think last time we spoke, it was about that Senate inquiry, because the mussel farmer was losing a few mussels. That came out in favour of the salmon growers, so no issues there as far as they're concerned. I think a few more regulationary type rules that they've got to follow, but international companies come to our salmon farmers to get best practice. So
Which is a real positive.
It is a real positive. So Tassal's in there, yield 3.9%, about 50% franked. But I've got a couple of figures there. Revenue, 309 million, and I've just compared that to
309 million. I didn't realise it was that high.
Yeah.
Okay.
So I've compared that to Wielandt, who are their biggest competitor in Australia, to 191 million. Value of the fish in the ocean, 222 million for Tassal.
So
salmon, isn't it?
So like an inventory almost.
Yeah. And for Wielandt, 151 million.
But, sorry.
You're right. The big thing about this is, though, the barrier to entry. You know, how many other people can, or other companies can afford to get fish in the ocean in those nets?
Plus also interest, and we've seen it with Bellamy's and Blackmore's and Capilano, sort of interest in that sort of clean food going into China.
Yeah.
And I think that
most of Tassal sales are in Australia, so they really haven't ventured there.
there's a huge opportunity for them, you know, because Coles and Woolies are their two main customers.
I think that goes into Aldi as well now. So.
And if you look at Wielandt, you mentioned Wielandt, their shares have actually done nothing, or very little. And I think one of the reasons... I think one of the reasons for that is because of that lack of vertical integration. And now that, you know, Tassal have got DeCosti, it gives them that whole chain, which Wielandt doesn't have.
Yeah, Wielandt haven't started to pay a dividend yet either, so that'll be the other thing that's sort of keeping them down a little bit.
So again, a bit more at the pointy end, but...
Definitely at the pointy end. You know, and now we're talking about the El Nino. You know, perhaps if you've got shares in companies that are relying on water and they haven't got the water as such, you know, it might be a bit of a strategic move as well.
Well, salmon farming without water could be a bit of a challenge for them, couldn't it? So that's about it from me. Anything else you wanted to cover off on?
All good.
Dornbusch Download number 59 in the can.
Dusted.
Till next week.
See ya.